right, welcome back to another Exit Liquidity live stream. We got myself, Jesse, and Bacon for now, and I think we're gonna have Dan come on later on. And you know what? Whoever else wants to pop on, so it's gonna be good. Um, yes, Foo Hat, we were on time. It's a Christmas miracle. So happy holidays. That being said, hope everybody has had a great holiday kind of break and whatnot. So and hopefully people are still on holiday break. I'm a little jealous if you are, but yeah,
That'd be me.
that rest and relaxation is always needed. So today, like, we're probably going to do a little bit of free form. There's don't have like a ton of like topics like outlined, but we're going to do like a 2023 in review a little bit, kind of reflection on 2023, looking into 2024. If you guys have any topics or any questions you want to discuss, go ahead, leave a comment, and we might just do a little bit back and forth with whoever is in the comments. So, and if Dan shows up, I think we're going to do a little bit of a hedging talk or hedging rant, or a little bit of everything. So, how was your Christmas, Bacon? How you doing, man?
I'm doing all right. Yeah. Just simple thing with family. The thing that we've done as a family, like we drifted from like the traditional Christmas of like big fancy like homemade dinner, and like very like and like you're at home with family and you're just doing that. Traditional gift giving and all that. And we still do that. We still have a tree and all that. It's just that over time, we've pivoted to what I've been told, and please don't cancel me, quote unquote, Jewish Christmas. So ask yourself, if you don't celebrate Christmas, what do you do? What's open and available? Stereotypically for the Americans, it's movie theaters and Chinese restaurants. So
Oh, yes.
yeah. Like
So is that okay? Because like my wife's family had a tradition of I think it's like Chinese on Christmas Eve. Is that like
yeah,
I'm
Christmas
guessing a
on
lot of
Christmas
people do
Day. Yeah,
that?
like I mean,
Okay,
granted,
Christmas Day. Well, I know
yeah,
Christmas Day, but
yeah,
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 that's funny.
yeah,
We
like
haven't done it for a couple of years now, but yeah,
yeah. It's
used
I
to do
mean,
it all the time.
like granted though, depending on where you live specifically, like you may need to like fair amount of Chinese restaurants will have modified hours. But yeah, like to me it was mind boggling because like just due to like last minute scheduling, I I uh I like arranged it so that way ended up like seeing two movies with my brother and one with my sister, like the three of us. And yeah, like all the movies like were packed. Like I guess word's been out, like hey, do this, and like yeah. So if you wanted a different form of a tradition going forward, have at it.
Nice.
Yeah.
Okay, so do you have any specific movie traditions for the holidays? I've got some that we try
Oh
to catch every single year.
yeah.
One of those being Die Hard. Do I have any Die Hard
Very
fans?
nice. Very nice.
Come
It is
on,
a Christmas
like
movie. I don't care what
it
you all
is.
say. It's a
It,
Christmas movie.
it legit is, man. I this year was even better because I was visiting a family over in Montana and they had a projector, and
Mhm.
I bought all my niece's Nerf guns. So while we were watching the movie, we were shooting the bad guys with the Nerf guns.
That's a fun
it
tradition.
was
That is a
it was
fun
pretty
tradition.
legit, man. It took it to a whole new level, man. But yeah, man, it was good. So like, let's see, Die Hard, Elf is pretty much a go-to. Christmas Vacation is like
Yeah.
try to get that one every single year. Um, but yeah, it's good times, man. Good times. I did also for Christmas dinner. I made a tri-tip, man. I brought my sous vide up there, and I sous vide a tri-tip for like 5.5 hours, and then seared it off on some cast iron, and that thing was delicious,
Very nice.
delicious. So
Yeah.
okay. Oh,
Yeah.
hey, you
Up,
know what?
up.
Milestone. First ever super chat.
Referencing Becky Quick.
Now a paid YouTube creator officially.
The grifting begins.
The grift begins. Becky Quick.
Yes.
So is that a stock?
No, she's the she's the media person who like oftentimes interviews Warren Buffett. Yeah,
Oh,
yeah,
okay.
yeah. I'm not gonna like air Michael's
I was like, the
dirty
Becky
laundry
index?
here.
Like, what are we
Yeah.
talking about here? Let's
No, no,
go.
no,
Let's
no,
go.
no, no. No, I'm not
Michael,
gonna.
if
I'm
it
not
is
gonna.
something
Yeah,
like that, let me know and we'll check it out.
yeah. I'm not gonna air out Michael's preferences and people. So that's up for him and who he feels comfortable with. Yeah,
Oh
that's not
man.
me.
Well, I mean, now I'm rich. I'm sitting on a whole $2. So
Yeah,
Christmas has been made. Let's
yeah.
go. Let's go.
Woohoo!
That was the cap off of 2023 for sure. For sure.
Yeah.
So speaking of, just look at this year to date chart. It is gorgeous. I
Oh
mean,
yeah.
25% up. S&P 500 is 25% up year to date. So, um, yeah, if you're always bearish all the time, then you missed out on some great accumulation opportunities over in 2022 and it kind of end of 2022. Kind of set us up for an amazing 2023, especially in some sectors like the tech sector, just absolutely ripped. What's QQQ up here today, man? Dun, dun,
Uh,
dun.
all times?
QQQ.
No, no,
No way.
just a hair under. Yeah.
No way.
Yeah. Way.
55%?
Yeah.
Dang.
Imagine if you shorted this.
I mean, that's what I don't get. Like I hate shorting. I hate shorting. Like I hate people that are long-term bearish too. Um
Perma
But yeah,
bear.
QQQ had a crazy 50% uptick. I think some of my lessons learned probably from this year is that you know what, I probably there was probably one or two stocks that I shouldn't have trimmed out of. But yeah, other than that, you know
Yeah.
what? Hey, I need to probably let my winners ride a little bit more, you know. That could have helped me out this year, but I mean, all things considered, it was a fantastic year.
Mm,
Let's see, what was kind of go into 2023 VNQ. And I mean, real estate really kind of dragged on this year, and
yeah.
it has been for a while.
Been a
Just
wild
looking at
ride.
Vanguard's real estate index fund, we
Yeah.
got down to pretty close to COVID lows. Pretty much, what was that over the 5 year at the low? That dip right there. That was almost, yeah, it was flat over 5 years pretty much. Back in the October lows. And I know a lot of the community members have been looking pretty heavily into REITs over 2023, and that turned out to be a great year to potentially accumulate some. I'm not saying the bottom is in yet, we don't know yet that, but we've had a really nice bounce back, and if that lowering interest rate narrative continues, then yeah, we could see some longer term tailwinds over the next, say, 2024. Maybe REITs are going to be the tech of 2024, man. I don't know. But man, what did you think of 2023?
It's been a really, really wacky ride. Like if we view 2023 like in its totality, like we had that regional bank scare. Uh Actually, I'm wearing a shirt for that occasion. It's really, really faint because of the lighting and the shirt itself, but yeah, it's a First Republic Bank shirt. Uh
Let's go.
yeah, yeah.
Go.
So it's so like well, we talked to like briefly about like perma bears and shorting, say, a major index, and how that wouldn't have been a good idea this year. Uh, like there are legitimate reasons that make sense to be pessimistic for like the short or intermediate term, but like I know that there when it comes to macro, what like there are two types of people: those that don't know and those that know they don't know.
Yeah.
Hopefully you're one of those people that know they don't know and you act responsibly. But
Yeah.
yeah,
Yeah.
yeah, that's just
I
me. Like,
there were certain people that were, shorting the Nasdaq, um,
yeah, yeah, or
going
Nvidia.
into 2023, and I just that turned out to be a really bad position. I mean, this is what ultra short, right? So this is a
Yeah,
3x short QQQ inverse ETF. It's down 73% year to date. So yeah, that sucks. And I don't know. Like there's I've messed around with hedging here and there, and I've come to kind of like my philosophy is that there's typically going to be certain sectors of the market and certain businesses that are going to have tailwinds when potentially your other positions have headwinds. So I mean, I like instead of like hedging, just making sure like I have diversification across my portfolio to hopefully take advantage of certain situations if they're to play out, right?
mm,
Kind of put yourself in like a win-win. Because long term, you know, uh, long term, if the sectors that you're buying are going to appreciate at let's say 9-10%, right? But you have some type of inverse correlation there, it provides for like a smoothing out of the volatility in your portfolio across time and potentially some rebalancing opportunities. So I mean, I know some people will like do more direct hedging, and it might be position like uh, say Paycom and Paylocity, right?
oh yeah, yeah, yeah.
Long one, short the other,
Mm-hmm.
hedge your bets. But then, like at the same time, if you're still bullish on the industry, that industry full term or long term, you're just kind of reducing your potential long term profits. Unless one of the players really, really sucks and you think they're going to have like a drastic like re rating or something like that. But I don't know, man. That stuff gets complicated, and,
It
and
does.
you got to get your timing like perfect on it as well.
Oh yeah, yeah. No, like I'd say I'd ask like are you a trader or are you an investor? Do you like short-term
Yeah,
volatility, or like can you tolerate short-term volatility, or do you absolutely hate it? And then there's the other question of, well, did you enter and manage your position properly? Like
yeah,
if the position's so big that you really care and are stressed out, maybe you should never have made it as big of like a position to the rest of your portfolio as you should have.
yeah, for
Yeah,
sure.
that
Yeah,
now
short spy 2024, right? Like,
I think he's trolling. I think he's trolling, but then again, it's Hayden. I'm not sure, and I think
nah, Hayden's just messing, guys.
yeah,
Um, no, like there is like definitely some advantages to doing
yeah,
long short
yeah.
portfolios. For me, it's just not for me personally.
Same here. Same
But
here.
I mean, certain people have made tons of money off of it. I would just rather kind of focus on hopefully long term winners and letting those winners ride. But let's see. What do you think about retail in 2024?
Um,
2024. Be interesting.
indications. It will be interesting. Like indications appear to be potentially like short term, intermediate term, cautious. Like I Dan and I both like forced ourselves to listen to Nike's earnings call, which was not that long ago. And as cringeworthy as that thing was, like there was a little bit a little bit more pessimism on forward guidance. So take that for what it's worth. That's only one aspect of retail, of course. So eh, I mean, again, maybe not. Uh, Target has had a quiet run since its lows or
Yeah, it
recent
has.
lows. Yeah,
I was just looking at that, and it had a really nice bump off of kind of that $100 area.
yeah,
I think they got really their low was kind of like low hundreds intraday, I think. Let's see, what was it? 102, 102-ish. So yeah, targets had a nice bounce back. And I think it could be one of those cases where if the market is starting to price in lower interest rates and potentially that being a tailwind to a strengthening consumer, that could bleed over to retail and Target, Dollar General, all these Walmart retailers could see some decent tailwinds from that. But I don't know. We'll see what happens. I'm not like, man, I don't know. I'm not like totally sold on the retail consumer bouncing back super strong, right? Like I think it could happen. I'm just kind of like cautiously optimistic on it. Because I really don't know if it's like, is this really the worst of the worst is behind us? And we're going to improve from here. It'll be interesting to see kind of jobs data, employment numbers, things like that. If we're kind of through the worst of the kind of weakening of the job sector or the job environment. But even that can be so nuanced to specific industries as well, right?
Yeah.
Like I know for the industry I was in, it definitely pulled back a lot in probably 2022 through now, and it's probably kind of starting to like equalize / strengthen. But yeah, I'm not sure. I think there were some retailers that definitely got into more attractive areas. Target being one of those. I think I was looking at Target around like 110-ish, 111. I think I went in and out of that pretty quick. I think I made like 20-25% on it or something like that. And then like didn't have it built out too big and just wanted to like trim the position, get it out. And that's probably another thing I could do better of, man. I could do better, like maybe taking a bit larger initial positions to where they're actually meaningful.
I suspect it may be a case of also the wider environment that you're in at the time, and also like the specifics. Like if it's like say an energy company, and you don't really know for sure what oil prices are for current reference, then maybe you can, maybe you can't. That being said,
Yeah.
though, I already made a prediction saying that, I think that there should be a good opportunity to limp in, and so far I'm having to eat those words. I mean, like it's not like it's necessarily like ran up and ran away, but
Yeah.
yeah. So far, right now. So
Yeah.
what do I know? What do I know?
Oh, let's see. Hayden got back. Long short with different beta profiles in the same industry is the best way to go. Yeah. Yeah. That's if I was going to do more of a long short, like a hedged portfolio, I think that's probably what I would look at. I don't know if I would. I'm kind of like skeptical of sometimes when the more premium players become maybe priced too premium, right? So like if theoretically, if I was to run a long short right now, like I don't know how I'd structure the short position. But one that I might consider is long Fortinet, short Palo Alto.
Oh.
And
Well.
it's kind of strictly because like Fortinet's been really, really destroyed, while Palo Alto has been given quite the premium lately. And like, I'm not going to do this, right? I'm not going to short Palo Alto. But I do have a long Fortinet position at about $52, 51, 52 right now. So it would be something that I would potentially. I know Palo Alto is the better player. I believe that. I believe they're the higher quality player. I think they're overpriced right now. But if if Palo Alto was to take a dive and Fortinet kind of recovered to where I think is more like a fair slash premium value, then I might actually take that opportunity to move Fortinet into Palo Alto. So it's not like a long short position, but it's almost like value seeking position, and then rebalancing based off of quality and value.
Yeah, it's an idea. Good old Andrew. Good old Andrew.
Yeah. Yeah, no, exactly, Andrew. Like, but it's one of those things where, and this is what I don't like about short positions is that if you're shorting because of it's expensive, you're basically doing this. You're shorting a really, really good player in the industry, and you're shorting a position that has long-term tailwinds, and you don't know how much, you know, overpriced premium legs that industry could have. It might stay expensive for like 10 years. You just don't know. So you have to be really, really right on the timing. And if the market doesn't agree with you, then you're kind of hosed, because you might, make 10% in Fortinet, but if your short position in Palo Alto still stays at a really good premium, you're probably not going to make anything. It's kind of rough. That's I don't know. So it's definitely hard to do. I would look at that potentially if I was forced to. I would look at it.
Yeah.
But yeah.
Yeah. All right, here's a thought when it comes to hedging. Hedging is like an anchor. What is the objective of the overall boat? To go from point A to point B, usually, or starting point to end point, one way or the other. Anchor is there for safety, but if anyone's ever been around an anchor, thing is heavy as hell. And sometimes, like the anchor does its purpose for a given period of time. Sometimes that anchor works against you, and you got to cut it loose. Um,
Yeah.
yeah. Now,
Yeah. No, for sure.
when and where and how to use said anchor. Best of luck, because these are financial instruments we're talking about. Because how you hedge matters a whole lot, and what you need to consider really, really matters. So that's yeah, yeah,
Yeah.
just know yourself, know what works.
Yeah. And Andrew, I would not short
Yeah,
either long term either,
yeah,
because I'm really bullish the industry, right? If
yeah.
you're bullish the industry, um, you don't want to hamper your gains from being short one of the players, because even if you're short a weaker player and they have long-term tailwinds, unless you're really confident that that player is going to get absolutely demolished, right? And it's a more of a short thesis, then I could see doing like a long short pair. But on an industry with that type of tailwinds, I just man, that would I would not sleep well at night. I'd
What
rather
if
just like put my cash there and then look for opportunistic areas to buy or rebalance into a higher quality player.
you're bullish Tesla and you want to hedge it, so you short Tesla?
Yes. Well, I mean, if you're short Tesla, it like might
I'm
actually work
I'm
out,
joking.
right?
I'm
Like,
joking.
oh man. Yeah, no, Hayden, you definitely have to like have a really, really good understanding of the
Yeah,
business. Like your short leg still has to be a very, very valid short thesis, I think.
mhm.
Um, like like I could say long Arista networks, but I probably wouldn't do that right at this pricing right now. But if I did a long ANET and a short Cisco, right? Because I'm kind of pretty bearish on Cisco. However, like I think there are some certain market dynamics that Cisco has right now that could actually make it to where it outperforms ANET short term, because ANET's gone on one heck of a run. Yeah, about 100, almost 100% year to date. So that was a damn. That was a pretty good one. And ANET's another one of those, man, I should have taken a bigger position. I was able to get get a decent position established on kind of that sell off around Q2.
Yeah, there was.
But yeah, man, when I first started looking into this, it was end of 2022. I think there was a brief moment where it was in the 90s to low hundreds, and yeah, I didn't take a stab. I think I have one share at like 110 or something like that, just because I wanted to watch her position. But yeah, man,
When
that thing's been a
when
beast.
when the watcher position has a great unrealized P and L, and if you
Right?
realize that P and L, it doesn't do anything meaningful for your net worth.
Yeah. I think, well, I definitely did build the position out way bigger later on in the year, and I think I'm still up about 50%
Yeah.
total on the position, and that's probably about a half of a year, so it's pretty decent. But let's see. I wonder. Okay, let's see here. Can we do a compare Cisco to ANAT? Oh, whoops. ANAT. Just networks. Do 1 year chart. Like that would have been all right. 5 year chart. Cisco flat.
Good old Cisco. They used to be the revolutionary ones.
Yep.
They used to
Pretty
be.
wild.
Yeah.
Pretty wild.
The times they do change.
So what? I mean, the sectors that kind of got demolished this year. Pretty much anything laden with debt, right? So retail kind of got demolished. REITs got hampered pretty dang bad. Had some
Yeah.
really good buying opportunities in those. Are you interested in any REITs, Bacon? I don't know you as a REIT guy.
No, I'm not. I'm not a REIT guy. Yeah,
Okay.
I just bang rocks together, and I'm just here for learning when it comes to that sort of thing. Yeah. Uh, Fabio has given his rough like template, so to speak. But like, part of me thinks it's one part trolling and one part like an okay framework. Um, yeah, just not for me really. Like, yeah, I just don't know the space enough.
Yeah.
Yeah,
I mean, we should have all just bought Clean Spark, right?
just win.
The sad part is I totally got on my position around $3 to $4 or $5, and then I think I took a little bit of an L on that, and then it just ran. But like I I was like reevaluating the position, and I was kind of getting to the point where I was like the depreciation of the assets, or like the churn of the assets they're going to have for their miners. I just don't know how sustainable it's going to be long term, when it really like their depreciation of assets is very valid, right?
Mhm.
There's some like REITs, you depreciate your asset, you still are almost depreciating and appreciating asset in a way. With 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 Bitcoin miners, right? They're depreciating assets that are truly like gonna go to zero, right? Their miners are truly gonna eventually be worth nothing, right? As they have to replenish those. I couldn't really just get my mind around that, of like how that would really affect the true cash flows of the company long term. But man, CleanSpark has been mooning the last, geez, like 2 months.
It's like those
Holy,
miners are correlated with the price of.
holy Santa. Bitcoin, you think?
Yeah, it's just
It's a
maybe.
it's a leverage play, right? It's a leverage play on Bitcoin, essentially. Bitcoin price.
Yep.
Boom.
Yep. There you go. Forget stocks, forget REITs, forget bonds. Just
Buy
just
tulips.
just crypto.
No. Crypto and tulips. That's where it's at. uh yeah.
Yeah.
No.
One hell of a
But
run.
so man, I'm still like I'm still really interested to see what Bitcoin does long term. because I think it could be one of those things that stays around a while. I could also see just getting like rug pulled and going to zero. I don't think that would happen unless like all of the big money was like ready to do that. But yeah, I don't know. It's hard for me to wrap my head around like actually valuing it because it really doesn't provide any true value in my opinion. So, but I don't know. Yeah, Staples got hurt pretty bad. What
Yep.
is
Same
what
with
is
utilities.
the Staple Fund? Jeez, I used to Vanguard Staples. Now was Staples? Did they go down or VDC? That's right. Or did they just kind of flatline?
I
Let's
want to say
see.
they
Let's
went
see.
down for a bit, but
Here today.
yeah, like
Yeah, they're
it's
pretty much flat on the year. But yeah, I mean, Staples definitely remained weak comparative to the overall market. It was interesting though because and man, this looks almost exactly like what SCHD's chart. That's funny. That's really funny. I wonder. Let's look at this SCHD 5 year. Look at that. That is super like highly correlated. But yeah, staples were pretty weak comparatively this year, but in 2022 they held up way better than the overall market and SPY, right? So I think in 2022 staples were pretty much flat, maybe down a couple percentage points, but then you had Nasdaq down like what 25-30%, something like that
ish, yeah, thereabouts. I want to
so
say for that time frame.
So they kind of had their year of beating the market just by pretty much doing nothing. yeah staples were down like maybe 4%. Nasdaq was down 33. It's pretty insane. NASCAR all out.
NASCAR all out. pump the what market cap was that company roughly?
Oh my
like
gosh, I don't even
single
want
digit million.
Yeah, I'll look on a different screen.
I mean, best of
Some of these
luck.
companies.
Best of luck. I'm not here to be Debbie Downer and say, "Oh, rabble." Like, yeah, I'm just politely say, not for me, not for
Oh
me.
my gosh.
I mean, this
Are you
again.
looking at the
Also,
chart, dude?
yeah, I've seen the chart. Yeah, like I've
Have you
looked
seen
at
the
his space
after
before.
hours today?
Yeah. It's just
What
madness.
in the
Nice run. Like, like
It's
congratulations
only
on the
up.
win.
It's only up 390% after
Yeah,
hours.
yep. Yeah,
Only.
that's like I would need like
Oh
a
my
person
god.
that I know I could trust to like help me out on
That will get
that
rug pulled for
process.
sure
But
eventually.
yeah,
Yeah.
like yeah, yep,
That's super funny, man.
yeah.
Dude. Oh, we got
Christmas.
Dan. We got
Oh,
Dan
we
coming
got
in.
Dan. Yay,
How's it,
Dan!
Dan? How's it going, Dan?
Oh no, I don't have audio from Dan.
I think I'd remember after all these times.
Oh, to get your mic?
It's on the side. So, have you given up and hedged your life? Have you
Hedge my life?
Hedge your life,
Yeah.
not stocks, right?
I mean, I do have life insurance, so technically,
There you go.
My life is hedged. my earning years are hedged, but
yeah.
Man. So Dan, do you ever hedge, my man?
I was actually reading when you mentioned, and I'm like, I guess kind of hedging is almost picking like two different investments that will behave differently in different environments, like different betas and
that's how I view
volatilities. So almost like I think that's modern portfolio theory, almost, isn't it? Like to go like
I'm not sure.
A dividend compared to a growth ETF, I guess. You have expectations of them performing differently in different situations, but I don't know. Like I can't imagine like hedging a specific position, really. So
Yeah, I have a hard time thinking about hedging a specific position as well. Um, I think there's definitely times throughout market cycles where certain sectors, certain types of businesses are going to outperform other sectors, and that's kind of how I view hedging. Is not necessarily shorting something, but having a diverse uh, asset classes that can potentially behave inversely during certain times, right? Um, so, and we've seen that with like what staples and tech, right? Staples and tech seem to kind of really inverse at times, along with utilities, energy sometimes. But for me, like the sector that I'm long term bullish the most is tech, right? Like that's kind of where my long term plays are. But then along with that is like if I think that tech is, let's say, fair value or overvalued at the time, I don't want to put my capital there, or I don't want to put the majority of my new capital there. I might be looking for other opportunities where I think those sectors at that time might outperform or hold up well. And then if the main sector that I'm interested in, which is tech, comes down, then it gives me an opportunity to move that capital over and rebalance. I don't really get the I don't get the like shorting the cues or something like that. That just doesn't make much sense to me.
And even like short, like say you're gonna buy puts if you're long term on a stock. Let's say well, for me, like when McDonald's pulled out of Russia, let's say that scared the shit out of me, and I bought puts on McDonald's so that I could, if it went down, then I could sell those, buy more stock in McDonald's, I guess. It's like, why bother? Like, if you have that much conviction long term on the company that you own it long term, why? Like, you're not.
Yeah.
Why bother?
Yeah.
Yeah.
Or for you guys, you have Google, I think, right?
Yeah, I've got Google.
Like, let's say you bought like when the AI test failed. What was it, like 6 months ago?
Oh,
That embarrassing AI test.
that was
Let's say that
great.
scared the crap out of you, and I mean, yeah, like, did you? Oh, I need to hedge or something, or this thing going cut in half. Like,
Dude, when they blew that, I'm pretty sure that's when it dipped into the 80s.
For
So like
I
beginning
think
of
you were close,
23
yeah,
or
about
something like
that
that.
time.
yeah.
Like right in here, I want to say, like right in March, it dipped back into the 80s, low 90s, and then just took off from there. So yeah, it's crazy how sentiment regarding something can drive a stock pretty low. No, best
Good old
example of that's probably Meta over 2023. Like that's just stupid, man. Like that
one
is
hell of a ride.
insane. It like 300% in basically a year. Like that's wild. That was one hell of a ride. Yeah. But I was bullish Meta. I didn't think it was going to recover that fast though. That type of a V pattern, like that's insane. That's like that's wild.
I guess the only other, hedging is just being diversified, I guess you could say. Like, that's really it. To me,
Yeah.
like the better way to say it, being diversified is a hedge. People probably don't think that, but
Yep.
you buy that's why I just went over SCHD and G together. I wanted to combo them to say like one's high beta, one's low beta. One should perform well in certain climates, and the other probably won't. So
Yeah.
at least you got something that's doing well. They'll keep you in the game. Because if someone's like, "Oh, I'm 100% growth because growth is the future," and I believe in it, it's like, okay, but you're going to be riding the crazy train, and can you stick to it? Because you could go, it could get really bad.
Yeah.
And I saw on Reddit people last year bailed on their growth investments. People bailed on their Palantir, all the things that they said they had such great conviction on, but they couldn't handle it when it went. And that wasn't even that bad of a year, honestly.
No.
But you could see it, like they couldn't handle that volatility of growth last year, and they missed out. So maybe if they had some I hate to say value ETFs, but like a growth or an index, something that kept them in the game so that they weren't getting crushed mentally, like not even just numbers, mentally getting crushed, and then they missed out. But
so
now they're going to buy now.
They're
going to buy back in now though. So
I'm going to try. Oh gosh.
Yeah, it may be like stupid of me, but like Andrew has seen my active port, and he's like, wow, there's like no tech, no large caps, and I'm like, well, yeah, I have the S&P 500. Like you know, like it's, for me, it's a good thing that I can't value really big banks and I can't value like big tech, because I sure as hell am not shorting them. And you know, when they go on their runs like Nvidia has or Microsoft has been, like at least I still have some skin in the game and can get some money off that. Yeah, so you know, it's fine. We all have our.
So
Yep.
I think like in my mind, one of the best illustrations of well, I guess hindsight is 2020, right? But I got like Fabio was even talking about this in what I think is 2023, 2022. Insurance providers in a rising rate environment, right? And how that becomes a tailwind to their income over that period of time. And you look at something like and this is how I would want to look at hedges, is I would want to try to find something that if I think a certain environment is going to play out, it's going to have, you know, massive tailwinds for whatever I'm taking on as a hedge, that might offset my losses elsewhere within my portfolio. So PRG, Progressive stock. Progressive in 2022 just went insane. Like I think it was up about 23%. And that was after a pretty good run at the end of 2022. But so Progressive over that year, 2022 to 2023, was up about 26%, while the Qs were down 35, right? You had a 50% deviation essentially between Progressive's performance and Triple Q. So yeah, I think there's opportunities like that where you don't necessarily have to take a short position in order to hedge your portfolio. It's more about, you know, can you identify sectors of the market that are potentially going to outperform and offset the volatility of your portfolio if you're overweight in certain areas like tech. Let's see.
What is this comment? Dan is shorting Tractor Supply. How dare you?
No,
like,
no.
Steve,
it's a hedge. It's a hedge.
I fully like, that's not a bad example. I've expected them to do poorly this year, and I've been kind of buying it as it dips below 200. Why hedge it? Like I'm long term, nothing's changed. Short term, yeah, they've had some problems, so I'd rather buy more stock than do some sort of short position that may or may not occur.
Yeah.
The same. Yeah. I would say like anybody in growth. I think that the biggest hedge questions are going to be growth investors, because they're terrified growth is so valuable right now. QQQ. That's probably the biggest. I don't know. I get. Did you talk about the daily the ETF products that people should not hold long term? Like, was it PGX and SQQQ?
Oh yeah.
I mean,
yeah, those.
So like, I would hope that would be, you know, obvious, but
I don't know.
Any triple leverage short ETF you should not hold long term. You probably shouldn't hold it at all. But like SQQQ, yeah, we went over this earlier. But SQQQ is down like, you know, 75%, 76% over the last year to date, right? Like these are not
PSQ. Sorry, PSQ.
PSQ.
That's another one. Same idea.
PSQ. Is it a triple levered? Or is it?
No.
This is just a short. So this is responsible. Inverse single lever.
Yeah.
Only one lever, Kronk.
Let's see. More levers.
It's down 37% still, right?
Why did they always stop at 3x? Why isn't there like a 7-8x?
I mean, it's called options.
Yeah.
Right?
It's like they stopped. Like, was 3x the red line? I don't think I've seen one beyond 3x. So.
I think it's probably because like there's so much like
They can't handle anymore.
What if you did like a 20x and then the market went down 5% in a day? You're like, sorry, all your money's gone. Like it's vanished. Like,
I swear I read that Bill Hwang got to 9 levels of leverage before it all crashed with Paramount.
The best
I don't know.
leverage ever. All the
The
leverage.
next level.
next.
But like for people, these
Yeah.
are like day trading products. I mean, they
Oh, yeah.
readjust every day, like
Yep.
the way these things function. So like they're literally not for this purpose. Like if you're a day trader, have fun. You probably know all about them, but
Yeah, I mean, so even SQQQ, which is triple levered, you could have Jesus, that's insane. Did it like okay? No, 5-year. What did he? Gosh, you can't even tell. It's like it went up. Okay, it went up like 80% in 2022. So like I don't know. Like I would just focus on long only. Like for me personally, that's what I'm gonna do.
Yeah.
There should be relative value somewhere in the market, and you know what? If I can't find it, then it's probably better for me to just like shove my money into the index fund, right?
that's what I do. I either find something
or
or I just fund the
Index.
index.
Yeah.
That's it.
and then wait, there's gonna be another time. People are gonna freak out, and eventually the companies that you might want to load up on or could get into really attractive areas, right? So
I was just annoyed because
5x.
I had this whole planned investment in retail when the Fed declared rates were going down, and like the market beat me to it, which was just so
Yeah.
wild. They were, and I look at the charts, like they were in that trade like 2 weeks before he announced. Retail already was going up, so it's like, man, I couldn't like there was no chance I had to pull the trigger on that. Like,
Yeah.
if you waited till the J pound announcement, you only got like half the gain, if not maybe less than that.
Yeah.
But,
Well, no, like you can't. What I'm noticing is you can't wait until like obviously like the announcement, right? It just isn't going to like, especially in certain areas where there is deep relative value. The market could start, bouncing back that sector, and it could recover 50% or something like that by the time you actually get the news.
Yeah.
So I think there's points in time where there's just certain equities, certain sectors are overly discounted for the like adjusted risk that they have, and you almost have to be like looking out, a year and a half to be like, okay, this is really, really, really like really good opportunity, and try to front run the market, which is like really, really hard. Also, you could like get screwed over doing that, but like something like ARE, when is that, 90 bucks, it's now up 40% almost from the lows, but happened quick. You had a couple days where it just bounced back, and a lot of REITs were like this. I mean, KRC I think is up 50% from the lows, or no, not 50%. It's pretty close though. Let's see. 56% from the lows, which is like nuts. And it gave you a couple of really solid opportunities. Not like you missed the low here in May, and then you almost got a retest of the previous low in October. That ended up being, we'll see if that's actually is the low going forward, and how much it can actually recover. But yeah, I think at certain points they're so discounted that it doesn't take much, right? And at the first sign of something decent, like like we've seen with Meta and other companies, they could be 40% up in a matter of a month, and they're basically on their re-rating.
Bum ba dum bum 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 bum
Bump, 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 bump. Man, dude, just you're like
Tobacco.
showering me with the dollar bills, y'all.
Well, in this case, it's pound sterling.
Yeah,
He's
I'll take it.
raining cigarettes on you.
Yes.
That's smoke, blowing smoke.
No,
Actually, it's funny. I actually looked into Philip Morris has those that what do you call it? The non-burn cigarette technology.
oh yeah, yeah.
It's kind of interesting. So you still smoke a cigarette. It's just this little teeny box. You put the cigarette in the box, and then it gets the tobacco almost to burning, under burning point, and then it vaporizes it. So, but I can't help but look at it and be like, I can't see a lot of smokers using this. Like, it just seemed like a pain in the ass. Like,
Yeah.
so like if you're that concerned about your health, you probably just wouldn't smoke in the first place. Like,
yeah. I
that's what
looked into
I'm like,
BTI.
it's cool, but like I don't see people using it. So I don't know.
Yeah. I looked into BTI, and it is like dirt cheap. It's just like, I don't know, man. I feel like for me, it's one of those where it's like, okay, my return's going to be in the dividend yield. I don't really like the market could re-rate it and apply a higher premium to it, but like the industry long term, I'm not sure if it's going to be like, I could see it being like a dying industry long term, and I just don't know if I want to get involved with that. Right? Maybe a trade potentially. That it could be like, I think if I did get into it, it would probably be for a trade and be like, okay, I'm gonna purchase something at what I feel is pretty discounted relative to their cash flows. I'm gonna collect the dividend, and then if I get a bounce back and like sentiment change, then I'd probably just get out of it. Something that I'm also like not long-term invested in, but think they could have short-term tailwinds is Shutterstock, and it's kind of the same thing, right? This one I think could potentially turn into like longer-term tailwinds, but I just don't know. Like, I'm not super confident in it. I think like their 2024 could be pretty good, pretty bullish. But it would probably be one of those where like, yeah, if it pumped back up to like $80 or whatever, I'd probably take my money and run. Because long term, I think they're going to still have some headwinds with them.
I do say, Dan, with what you originally said with the Philip Morris technology, bearish Zippo, even though Zippo Manufacturing is a private company, so no way to short it. Zippo and BTI, there's your hedge pair.
Citadel and BTI.
Not health or financial
Who?
advice.
Who bought Jewel?
Altria, right?
Was it Altria?
Yeah.
They took a big loss.
Yeah.
That turned into like a absolute like goose egg, right? Like,
not great.
Yeah.
Not great.
It was Altria.
Yeah.
And then I showed, like, I did a video. They've lost half their money on their Budweiser investment, most likely. If you look at the time they bought their stake in it.
Yeah.
Companies buying other companies. Oh, I got 2 comments about when I said when GameStop's going to let Ryan Cohen just invest GameStop money. I got this comment that was like this fucking long, telling me that Ryan Cohen's like a god of investing. I'm like, yeah, his own money. He's probably good at investing his own money. I'm not arguing that, but companies are terrible at investing in other companies.
Yeah.
There's tons of examples of it going poorly. So,
yeah, no, it's kind of like the empire building.
Yeah.
A lot of the times that doesn't work, and I think like the best empire builders are probably private equity, or what would you say? Like, gosh,
I mean, LVMH is like the king of it, right?
Yeah,
basically. other than that, I mean,
Yeah.
Blackstone's well, they've not always done
Blackstone, yeah.
well. Not always. They're doing well right now, but
Yeah. I think it takes a very special management team and company to like just accumulate companies and um I don't know,
you know who
build up
else does that
something that's
actually?
profitable from it.
I didn't realize Pfizer kind of empire built actually. When I was looking at
Yeah.
them for a video, they have investments in like 100 little companies that it's just like that they never give money back to shareholders. You can look at their like they barely raise the dividend, no share buybacks. So basically all their money is going out to like invest in other companies and M&A. Oh, and it's one of the worst performing stocks in the US. One of the
Yeah.
worst big cap ones. So
Hey Sarah, how's it going? It's my niece.
Hey, family.
What's going
Christmas
on?
party don't stop.
That's right.
I just want to. There we go. Did I get it? Screen
cool.
capture. Yes, I got the screen capture.
You got the screen capture?
I got a screen capture. I'm sorry. There was a series of funny comments from chat that I
Yeah,
thought
so now
was
can I
real
ban them?
hilarious. I say go with your heart. This is your channel. I'm just the guest, man. I'm just the guest.
Man, all I'm
I
gonna
am
say is
nobody.
like this ain't that type of place, buddy. So yeah, like if you want to go pump your $1 million penny stock somewhere else, go for it. But mention it again, you're gonna get banned.
No, like for me though, the hilarious thing was like he compared it to, or the user compared it to, quote, the hottest girl in town in the bar, and we're just running away looking at her, and then we get called a bunch of simps. So like we have 2 points. How that line connects, I don't know.
I mean, if you come on my channel and give me a stock and it doesn't make money, I'm just gonna laugh at you and tell you to F off, basically. It's like, are you
Yeah.
serious? Like,
I know I'm
cool.
too nice, probably.
Hey, let's look at
Nice.
Rocket Labs. I hear it's hot stock. It's never made money
Hey.
before.
Or what, like Sphere, right? Isn't that the
Good old Sphere. Andrew's foaming at the mouth now.
what's the ticker on it? Is it SPHR?
I don't remember.
Hey, it is. I
it
think so.
is. It is. Yeah, Sphere Entertainment.
Here he is. Oh, he showed up quick.
Yep.
He's about to get you.
Just so much foreshadowing. With
Andrew's
so
like,
many
let's go,
topics.
Sphere. No, and all all jokes aside, I mean, Sphere is one that we kind of joke about as being like a pretty not really understanding the business model. Not seeing how it could really be super viable like long term, but it's cool. I saw it in Vegas. It's really neat. I just don't know how you make that into like a long term cash printing machine.
Because like so far they had U2, Bono. They probably paid U2 a ton of money for that, and then they had a movie. They had a movie made for the Sphere by, was it David Fincher or somebody, some famous director. So
Yeah,
they're gonna have to overpay for people. Like if they want that level of talent, I don't see how you're gonna make money. Right? They're gonna be paying all the money out to the talent.
Yeah. Well, they were over budget on the build by like 2 billion, right? It was supposed to be like, what, I think a $1.5 billion build and turned into like 3.5 or no. Yeah, 3.5, something like that.
I think that's
I
think it was
crazy.
Like how you imagine how the maintenance on all those LED bulbs.
That's what I'm saying, man.
Thousands.
That's why like it has to be in a desert, right?
Yeah.
I think you like just cleaning them and stuff, right? Like if you're in a place where it snows or I don't know, get dirty easily, like I feel like you have to be in a desert and like the right environment to even make it like, I don't know, somewhat viable long term. But even then, it's not something that I think you can replicate easily.
No, you see, this is where you guys are wrong, because you know how like Elon's been digging like random holes here and there. They're gonna team up,
Sphere
and it's gonna be underground spheres. Yeah. So funding secured.
You can't see it.
Easy capital raise right there. Okay.
I think no, like Andrew, I bet Dubai gets a sphere.
I
For
wouldn't be
sure.
surprised at
That'd
all.
be my
You know,
first.
like
Yeah.
it makes sense. And it might be one of those things where, yeah, maybe it turns out to be a good trade, right? Like maybe you're able to time it and get some hype into it, and ride that wave a little bit. But man, that's just like, ugh. Oof.
Well, Qatar could get one too. So you
Yep.
could put like 2 or 3 in the Middle East.
Yep.
Yeah.
That's probably about it.
Uh,
Yeah.
Beijing, they're gonna do it. They're gonna turn everything around
Beijing.
through the power of Sphere and Dolan. The Dolan family, they're gonna solve.
That'd be the
all-
only other place, honestly, I could see these being built. I mean,
if Dolan can resurrect the Knicks. I'm sorry.
Oh man. So I guess like we're coming up on an hour, so we should probably end it here soon. But to wrap up, 2023 was great. Hopefully you were accumulating in 2022 because that was a great opportunity for certain sectors, specific like tech. 2023, as far as the accumulation side, there were a lot of, I would say, solid businesses that had higher amounts of debt that were getting really re-rated from interest rates and an increased risk there. It looks like REITs probably turned out to be a really, really good asset to accumulate in 2023, which luckily a decent amount of people were accumulating those when they're at pretty depressed valuations. 2024, I don't know what's going to happen. Of course I don't, but like it's going to be interesting because like I could see the market making new highs, and just kind of continuing to trudge up. I don't know. I could see like tech taking a breather for a while, right? Coming off the Q's coming off a 50% year, 55% year. I could see them kind of maybe trading sideways, tech trading sideways, and maybe we see a bounce back in some of those higher debt companies with the re-rating of lower interest rates. And small and mid caps could be pretty interesting because they've gotten like no attention lately. So I think there might be some solid companies that are small mid caps that could be pretty interesting. Are there any like sectors or anything that you guys are specifically interested in 2024 that you think might get interesting?
I already said it. Like for me, it was energy. I think there's opportunity, and I think I'm on record saying I think you can limp into it. That being said, though, so far I've been proven wrong, and I'm a moron. So take that for what it is, chat.
well, probably retail and housing come to mind for me.
Yeah.
So. Dude, I'm still kicking myself for not getting into was it DHI?
Oh, DR Horton.
Yeah, DR Horton.
Yep.
Man, I did a video on this like a couple months ago, 4 or 5 months ago, and I was like, you know what? Around 100, I think it could be really, really good value. Yeah. And it got to 101. and then look at that, 50%. Like, oh man. But I don't know. I don't know the industry that well. I didn't really have strong conviction in maybe the overall like underbuilt thesis. Obviously that's playing out. I think it well, what was it? I think was it Warren Buffett right here?
Yeah.
Wow, interesting. So
Buff Dog liked it around that price.
Buffett bought, or the release of Buffett owning came out at 126. It went down to about 100, and now it's back up to like 150, which is crazy. So yeah, I agree with you though, Dan. Like home builders are pretty dang interesting. And relatively speaking, I think the valuation is still not that crazy.
It's hard. Homes are so hard because you'll find a product that could do well, and then you find the company that owns it, and it's a conglomerate, and you're like,
yeah, oh yeah,
back to the drawing board. Then you find another company, and it gets acquired. You can't even buy it.
Yeah. The when it comes to the home builders, I purely sat on the fence because I had like two conflicting things. Like for me, it was I could see that on average, like American housing supply was underbuilt, and that the home builders were being disciplined because of '08 memories. So they weren't like building like absolute mad people. That being said, at the same time, though, some people I respected were shorting or thinking about shorting home builders. So I was like, just sit on the sidelines. I don't have strong conviction one way or the other. But
Yeah.
yeah,
Yeah, industrials, Andrew. I think you could be onto something there.
maybe.
I think there's probably going to be a decent amount. Like if the SPY, I would not be surprised if the SPY, goes up 10-15% or whatever in 2024. But the bulk of that appreciation of the SPY is from like little pockets of sectors that are at a relatively decent value right now. Having a nice recovery and less from maybe the big seven continuing their uptrend. That being said, we'll see. It'll be interesting.
The big sector that will take off will be, it rhymes with biotechs. Shout out Big Pharma Shill.
It rhymes with biotechs.
It's a
biotechs.
Space, I have no idea what I'm doing. So yeah, there you go. You heard it here. See, joke's on you. I at least admitted it. There you go. There you go. By Big Pharma Shill.
All right. So next random question.
Yes.
Or are we just double topping?
Double top. Oh, God.
Technical analysis.
Look, it's at a high where it used to be at before. So that's bearish, right?
Should I pull up my double bottom guy
double
from
bottom
2023?
Double bottom.
He said I was going to double bottom at 3,500. One of the predictions I pulled up. It's like,
yeah.
Not even close. But
gold
almost like
does great.
It's almost like timing the market is hard, guys. Jeez.
Spot price for gold continues to go.
Yeah, what's gold?
Yeah, gold has quietly had like it's quietly been running.
Shiny rocks.
I mean, like unless unless you really know the gold space, in which case you'd be like, quietly, rabble, I have already known this. So my bad. Not all of us care about shiny rock, for better or for worse. Yeah,
shiny rock, pretty.
Okay.
Shiny rock.
Go buy gold. I don't know, like buying gold miners is like retarded, I think. But
I love that the Spider Gold Trust has a PE ratio.
I know. I just saw that. I was like, huh, that's interesting.
Oh.
It is like gold is one of those interesting things that seems to have inverse correlation based off of fear events. So yeah, I know when the whole Russia-Ukraine invasion was happening, gold got a nice little pump. But yeah, it's also one of those where like long term the annualized CAGR hasn't been that great long term on it, so it could potentially turn into like just a drag on your portfolio. But at least it has like industrial uses and stuff like that, right?
This is true.
At least it has some type of like utility use to it. And that probably isn't going to go away anytime soon.
I love gold.
So let's see.
I lost my portfolio in an unfortunate smelting accident.
Staples, REITs, industrials, or tech. Which one are you choosing in 2024?
If it's big enough, all of them, because I'm majority indexed.
Okay.
No, I'll actually probably be looking into industrials. My numbers and like fingers on that pulse has been way overdue and out of date. So it's why not? Maybe
a lot of the really high quality industrials are already pretty 52-week high. Like,
God,
yeah,
all right.
and that's
Never
what I was
mind.
gonna say with
that's what's so
industrials
weird about
was
this
like,
time. Everything's done well. Like,
Yeah.
except for
I-
utilities. Like,
I was
Oh my
in
God,
and
it's
out
a
of my
bubble.
industrials pretty quickly. Probably gonna regret that, but what was it? CE. Yeah,
Yeah.
they're already recovered pretty well. Because I think I took this one from about $100 to like 130 or something like that, or but because what was it? I think the 3 that I bought, because I don't know, valuations seemed decent at the time, so I took positions in 3. I just didn't know who was really the quality player. But I took positions in, I think it was Len Basel, Dow, and CE, and then cut those eventually. But I need to get better on just like not cutting stuff.
Nah, the most overlooked thing, a silver ETF. There you go.
There we go.
Joking. We don't even need to waste anyone's time on that. It's not worth the effort.
Silver.
Let's make silver your emergency fund.
Oh, that's what you're going off of.
Joking.
Okay. That's funny. I think if I had to pick, I think I would go with potentially Staples or like a SCHD equivalent and REITs for 2024. REITs for 2024 just kind of getting a bounce back and a normalization, but they've already bounced back so much that it's like, okay, maybe on the year to date they don't actually do that good in 2024, and they're just maybe like sideways or maybe a little bit higher. But if the momentum, I think, in REITs continue, and we get those 3 interest rate drops, they could have some legs. So we'll see. But all right, guys. In the comments, if you have any questions or anything like that, hit us up, and I'll give it a minute or 2, and then we'll sign off.
I'm still a little concerned about inflation. That being said, just for fun predictions, spaces that I'm not good at would be biotechs and tech. And you know what? Just for fun, just to go against myself, I'm gonna say those 2 keep running.
Okay.
This means either Big Pharma is happy, or is gonna be like 1 year from now, you screwed it. You screwed it all up. You ruined my biotechs.
And then you can just tell them I was giving you a better accumulating opportunity.
Yeah. Yep. Yeah. Good old predictions.
Yeah. We'll see. Dan, what do you think?
what for next year?
Yeah.
It's gonna be tough. All the things I like to buy are just like, it's all so expensive.
Yeah.
So like, do you force yourself to buy something that hasn't run already? I don't know. I'm gonna find that home investment. I haven't given up.
It's out there.
It's out there somewhere. One that hasn't run up like 80% in 6 months. So
yeah.
Well, I think for me, like, especially if it keeps running, like I'll continue doing my typical index investing, but on the individual side, it might just be a time to kind of accumulate cash and trickle some in here and there, but kind of work on that cash pile. And just preparing for the next opportunity, which is hard because you never want, like, in my mind, I never want my cash pile to be too big because I don't want it to be too much of a drag. But then at the same time, like, you can have these periods of time where certain equities will disconnect kind of from the market and sentiment takes over and they get into really attractive zones. You just never know when you're going to get those opportunities. It might take a while for them surface and come out.
I have a candidate for Michael's question. What stock
What's
is
that?
most unvalued at the moment, or like undervalued? This one
Dogecoin.
doesn't. No, it doesn't. It doesn't come from me. It doesn't come from me. Credit Hayden. But Jack's Pacific. Ticker symbol JAKK. Just take a look at that PE, that beautiful PE, and then also take a look at how it's ran. Yeah, JAKK.
Cool.
Credit Hayden. So, all right, technically not the most undervalued because there are certainly PEs lower than that, but yeah, it even ran. Even with the run. Even with the run, it still has that small market cap and low PE.
What do they even do?
So they have toys, basically. I'll tell you what they don't have. They don't have debt.
No, I mean, hey man, that's a good combination. Yeah. Toys, no debt.
Yeah, it's they're a toy distributor. I mean, they have some patents too for like some other toys, and whatnot. But
man, it's wild.
Again, not my original idea. Credit Hayden, because Hayden was the one that passed the idea nicely across my desk, my metaphorical desk.
Go.
Yeah, not wrong. Basically, they are the scrap. They are the scrap getter. Like if it's not Hasbro or Mattel, Jax has Jax is able to scrounge around.
Dang.
I mean, 5 this is undervalued at the moment. It's like,
yeah, even with that massive run up.
Yeah.
If you want
small caps, man. We're saying those small caps, right?
Yeah.
So I mean, small. Yeah, that's why I'm got to look for the small stuff.
Yeah, I think there might be opportunities in small caps.
I agree.
I think that's probably where I'm going to start focusing is on the smaller cap stocks. Because if we do go into the next kind of like momentum bull cycle, I don't know. It seems like small caps and mid caps have kind of been left behind lately, and there could be some gems out there. Maybe Jax is one of them.
I just find it hilarious that they don't have debt. And you look at their investor relations, like good luck trying to find anything on the board of directors because I couldn't find much of anything.
Yeah.
They only got like 3 execs there.
Yeah.
It's funny.
Man.
Like C-suite execs is what I mean, but
that's crazy. Dang.
Yep.
That move.
Even with the PE.
120%. Crazy.
Yeah. Just figured I'd throw that one out there just because it was intriguing.
Well, hey, maybe you'll have to do a pitch on it.
No.
Hayden will. If Hayden can ever come on sometime.
Yeah, Hayden.
Go, man.
Hayden's gotta be patient with me, like mentioning his ideas and then butchering the pitch.
Hayden's like, dang it, Bacon! I wasn't done accumulating that yet. Come on.
McBuda. Yeah, it was funny because McBuda and I have like collabed a little bit on the research.
They have 2 patents on toilet paper blasters. It's a tech company and defense contractor. Gold. That was gold. Oh man.
Yeah, fun little company. And maybe there's something there, maybe not. But
nice.
Yeah.
All right, guys. Well, we are going to sign off. Happy holidays, Merry Christmas. Hope you guys have a great rest of your week and a great new year. And yeah, we'll see what happens in 2024. Hope you guys had a great 2023, and we will catch you later. Thanks. Bye.